Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management. And if you like these posts, please hit the like button or leave a comment or share them if you think somebody can benefit from them. Well, today we're talking about world tourism. We keep hearing about how the economy's not doing well, or globally the economy's not doing well. I was surprised on this stat here, and I looked at this here. 7.2 million jobs added in 2015 because of people traveling around the globe.
Yeah, I mean, that's crazy. That's a $7.2 trillion contribution to global GDP. You know, it's a huge factor. And one thing we're kind of talking about is, you know, the U.S. has done extremely well here. And, you know, oh my gosh, the dollar's so strong. What's that mean? We can go travel and everything's a lot cheaper to us. So what's that do to other economies? It helps prop them up as well.
Yeah, I hear people, I'm going to Europe, I'm going to Asia, and so forth. So it's actually happening. And look how much it is. And I think our economy is changing. It's not this manufacturing economy. 10% of the global GDP comes from tourism. We're changing the way things are done around here.
Yeah, I mean, there's a ton of jobs in global tourism too. As you can see here, 284 million global tourism jobs. That's great. You know, we always talk about employment. There's lots of employment opportunities in this field.
Yeah, related to it and so forth. So today, Federal Reserve Chairwoman Janet Yellen, she spoke today to the, the New York Economics Club, I think it was. Yeah. The Economic Club of New York, that's who it was. And she surprised people because she came out very soft on her comments. And this is what they call, she's very dovish. And there's some concerns on that because the economy seems to be doing well. And people start asking, why is she feeling so dovish? What's she thinking?
Yeah, no, she kind of talks about there's, you know, the data's been mixed, but it's just like, you know, it's always going to be mixed. There's not going to be 100% like everything is great, you know, then we'd be in a boom. We'd be seeing inflation of 10% if everything was perfect, but it's not. So, I mean, I think at some point she's going to have to step up and, you know, we were talking about let the kid go. Let him experience some things in life.
Play a little bit. And by the way, we didn't put it down here, but this is the newsletter for today. There's more detail in the newsletter. So make sure also here, we'll have it here on Facebook and our website. We can get the newsletter. We'll talk about more detail. I'm going to explain what dovish means, what hawkish means, and so forth. But what this means to you briefly is that because of her comments, we now expect interest rates to remain low longer than before. So this is, in our opinion, this is not a good thing, but this is what's going to happen for you.
I mean, some future problems that could arise are, you know, if we do slip into recession somehow, one of the tools that helps, you know, solve a recession is that lowering of the interest rate. Well, we're nearly at zero interest rates right now. There's nowhere for us to lower the interest rate. We'd have to we would have to enact bond buying programs to help solve the recession.
Right, and that's that QE, that quantitative easing everybody hated. Would it be what, QE 5 or 6? We spent a lot of bullets before in 2009, 2010. We've got great, you know, job numbers now. We've got great, 18 million cars built per year. We've got good housing numbers. We need to start reloading that gun and put interest rates up because there will be a slowdown coming up, and you got to be prepared for it.
Yeah, and then we talked about recession. We still do not see recession coming anytime soon, but I mean, we're talking years down the road here, and if interest rates are still super low, that's what we think is going to be a problem.
Yes, you got to prepare now when things are going well because there will be a time the economy ebbs and flows up and down. So, as always going to be a company to kind of look at. And I was very excited about this company because they do the knee replacements, the shoulders, and our population is aging, and they're using a lot of these. Well, Zimmer Biomet Holdings, symbol ZBH, the current price is $105.84. 52-week high is 119 and the low is 88. And Zimmer just bought Biomet not too long ago. But when I looked at this company, I got very excited because one of my favorite publications, Barron's Magazine, showed the PE was 12. I thought, wow, this is great. Very disappointed with Barron's right now.
Yeah, I remember coming over Saturday morning before we went to the radio show, and you're like, oh, excited to look at this company next week. So here we are, and you know, the first thing that really stood out to us was unusual expenses of $919 million. Don't like to see that. You know where you could find that information? The 10Q or 10K. Go there and check it out. Going out to December 2017, estimated earnings per share are $8.68. However, on that more stringent GAAP basis, $6.59, nearly a $2 difference. Don't like to see that.
No, and this is all the things that we see this, and again, we don't need to look at the 10Q, 10K because we know we're not going to look at this company. I don't like what we're seeing, but you base this on the target sell price. It's around, what do I say, 108, I think it was. The target sell price is only 109. Yeah. So that's the target sell price, and also this company has debt to equity of 117%, and they have a lot of intangible assets. So there's no, you take all those out, there's no value to the company. So I'd actually be looking at the competitors, J&J, which does, they're not just a drug company. You think of Bayer aspirin, or not Bayer aspirin, but baby aspirin and so forth. They're pretty big in this area as well. So is Stryker with these knee replacements and hip replacements. They're actually building these. So I'd be looking at these companies. I'm going to say goodbye to Zimmer Biomet. Not happy with it, with their situation there. So, well, I know you find this investment stuff, it's kind of hard and everything. These guys look at things that I can't find and so forth. That's why we do this. We love doing this. So what you need to do is come in for a conversation with us. Give us a call at 858-546-4306 or visit the website. You have questions, want to come in, set up a time, smartinvesting2000.com.
And don't miss any upcoming daily briefings. Join our Facebook group, Smart Investing with Brent and Chase Wilsey.